Good morning. It's Vijay here. Welcome to yet another episode of Pre-Market Commentary. Today is 4th July, Friday 2025. It is the US Independence Day. So today the US markets will not function. But there are exciting things which are happening, and the biggest headline is about Jane Street. Jane Street has been banned by SEBI. Jane Street has been told that they have to disgorge all the profits. Right now, they have asked to disgorge about 4,843 crores, while they've actually made more than 20,000 crores. So what Jane Street, for people who don't know, Jane Street is a big hedge fund, basically a quant hedge fund where they take positions in futures and options with the underlying cash market, and they play around based on the movement of the cash market and profit from the options position. Options market is a big market in India. It is probably the biggest in the world. Lots of people are, enthused to trade in options, and I think Jane Street is another entity which in the past we had something called operators. So Jane Street was an operator. They found the weakness that more people are getting into options, so they started playing heavily into options. Jane Street is not only in India; they're a global firm, and they employ strategies where they find inefficiencies in the market. In India, the market inefficiency is basically in options. A lot of people have gone in and lost hugely. SEBI itself talks of 93% of people in options losing money. So what are their modus operandi? This was what operators did, and operators do even today, was they bought large quantity of F&O stocks in cash and futures. Basically, they operated on Bank Nifty because Bank Nifty is only 12 stocks, and also Bank Nifty, the top three stocks are having nearly 40%. That is SBI, sorry, HDFC Bank, the ICICI Bank, and Kotak Bank, and Axis Bank. And these banks are having nearly close to 40 to 45% of the weightage. So it's very easy to manipulate. Even in Nifty, you can manipulate because the top three stocks are having approximately about 35% of the weightage of the Nifty. That is Reliance, HDFC Bank, and ICICI Bank. What they did was because of that kind of strategy, and it was executed perfectly. And the volatility which we saw many days used to see, especially on expiry days, you could see great amount of volatility, and it was clear that Jane Street and such firms were behind it, big quant firms. And so what SEBI has done is basically they are saying that we want to protect the integrity of the market, and therefore we are going to ban them, which means it's a wake up call to other entities who are also employing similar strategies. And unpopular opinion here, I believe there is nothing wrong in those strategies. They are taking advantage of the lacuna in the system. If we have strong systems, if you have more players, stronger players, then one can obviously take opposite position to Jane Street and neutralize the volatility. But however, it's a very popular move where you go and ban somebody, and then you think you have won the war. Actually, what has happened is you probably will lose the war because the liquidity will dry, and many large firms, if they are thrown out of the market, then liquidity will collapse. And what liquidity we had before 2020 will happen in the options market, and people will more actually. So it is we have to take it with both positive and negative. Personally, I feel they can win the case if they go to Securities Appellate Tribunal, but we don't know what will happen. But right now they are gone, and therefore the liquidity will dry, and we have to see what happens in the future with other competing entities. So yesterday Nifty declined for the second straight session. It was doing well for some time, and suddenly it fell, probably because the Jane Street news was known to a few people, and basically SBI Life and Kotak Bank, which got a downgrade, brought it down. Small caps small caps actually went up. Auto was the biggest gainer. Pharma also advanced for 10th consecutive session. Just look at this. See, we are all talking of Nifty, Bank Nifty, but there are stocks and sectors which are doing very well. Pharma going up by 10 continuous days, and auto is doing well. And FMCG also did well yesterday after falling down for 4 days. PSU Bank was the top sectoral loser because PNB did not report great results. I mean, great, not results, the guidance which they mentioned was not good enough. Actually, it is good, but not good enough. Reality fell for sixth consecutive session because there is a fear that the real estate prices have gone overboard, and mostly people who are punters, that investors are buying homes rather than people who want to live in the homes. So Nifty Bank also lost for the second consecutive session, but they are hovering between 9 and 20. So that is actually a good sign for the market. You need some steam to be let out. Otherwise, the markets can become very unstable in the medium term. So that's a good sign. Any correction is a welcome sign. We are in a strong bull market. We don't have to worry about corrections. It's a good opportunity to buy, is what I believe. So FIS sold about 1,500 crores. DIS almost matched them. So it was even Stevens as far as the institutional investment is concerned. Let's see what happened globally. Europe markets did well. Dow Jones went up at one time 400 points, closed 344 points. S&P rose about 0.83%, and Nasdaq did well by going up 1%. The trigger was the non-farm payrolls did very well beyond expectations, but the kicker there was that if the non-farm payrolls are good, then you will see the Fed will postpone their interest rate cut. But I don't think that is the way to look at it. I think U.S. economy is doing well. That is the positive part, and the Fed rate cut will come because inflation will not go up significantly. Then you also had the mega bill that big beautiful bill of Trump got passed by the House, and that will push in a lot of money into the system for a period of time. So I'm expecting a big rally in US right now. S&P is about 62, 6,300. It's struggling there, is what people feel. It's actually at an all-time high. I would think a 7,500 is not ruled out based on what the big beautiful bill is going to do to the economy and the markets. So gold was steady. Brent crude has slightly come down, and their OPEC is looking at a hike in August. So Brent is under pressure. Dollar index tried to go up, then it has come back below 97. So what are the stocks to watch out for? Bajaj Finance came up with reserve the guidance. So they actually seeing a multi-quarter low on AUM and deposit growth, but strong on the year-on-year gains. Look at that in negative. Bandhan Bank deposit rose 16% year on year, but the loan book has gone up only 6.4%, and CASA has dropped to 27. Now, market is feeling it's negative. In my opinion, it is positive, not because we own it and we have been owning it for quite some time. It's simply because the loan book they have reduced because of the micro sector loans, and that Bandhan Bank is a big player there. So it's actually good because then uh, your book will be cleaner. So defense stock should get a boost today because the Defense Acquisition Council has cleared about 1.05 lakh crores worth of 10 capital buys under Buy Indian route. And Bank of Baroda has come up with the neutral results. That is, global business has gone up, the strong growth in domestic retail advances and global advances. Marico should do well because they claim there is a steady demand with rural recovery, which also means it should spread to Lever and ITC and other FMCG companies. UCO Bank's guidance has been so-so, but nevertheless, I think more or less things are in place for a good rally. MQR Pharma is now the latest one, which is going to do a QIP. So they are coming with an offer of 551 crores. They are through a block window today. They will be doing the QIP. Then the sobering note, a good positive note from Nomura Sonal Verma, who talks about US tariffs on India are low to 10% from 26. Now it is 26. If it comes down to 10%, then this could give a tariff advantage to India in sectors such as textiles, electronics, and other manufactured exports like toys and footwear. Now, we will know about it. People are talking of a mini deal going to come in the next few days, and then you will have a final deal only in October, is what the general buzz is. So we have to observe that keenly. I feel a deal will come through. It will actually benefit US in the short term, but it will benefit the Indian equity markets in the short term also, is my thinking. So we go into Friday, and US is not, market is not there. Generally on those days you have the bulls coming into full play. So we have to see, probably we'll see some volatility because of the Jane Street, and whatever it is, there are lots of stocks to be bought and which we are buying on a regular basis. Yesterday we bought Reliance, for instance. We believe Reliance has got a long way to go because it is broken out about 1470 was the resistance. It's broken above that, so at around 1500 clear breakout. So we have started buying into Reliance. So this is the second day in succession which we bought Reliance. So whatever you do today, I hope it is successful. Thank you for joining me.